Right. Here we go. Wonderful and beautiful, glorious day it is. Ladies and gentlemen, this is the day the Lord has made. Let us all rejoice and be glad in it. It is a super Saturday. Absolutely, it is. It is December 7th, 2024. All right, we are closing and on we have what 24 days, well actually 25 days. We got 24 days left in December. We have 25 days left until January 1st of the new year. You can start in this breath and in this moment strong. Okay, the past is the past. Can't cry over spilled milk, but in this breath and in this moment, let's continue to be strong and continue to move forward. All right. So what I want to do starting on Saturdays, people that's also in my free trade community, I want to start doing an onboarding session. Onboarding session meaning hey, we want to make sure that you got your you have your trading account squared away. Whether it be your demo, which we call a vision account, or whether it be your live account, we want to make sure it's up and running and squared away, okay, for the next upcoming week. So that's what I'm gonna start implementing as well on Saturdays. That's not gonna be on YouTube because that is personal confidential information. What I'm gonna do is like a separate Zoom call for people that was already in the free Telegram group. And I'm going to come on maybe a few hours earlier before I do the weekly trade watch list. And we're going to get your stuff, help you get your stuff set up. That way you don't have to be bombarded with that information by yourself and alone. And then we'll walk through the onboarding process. So that way, when it comes Monday morning, when it comes our session, Monday morning session at 4:30 a.m. Central Standard Time, 5:30 a.m. Eastern Standard Time, 2:30 a.m. Pacific Standard Time, we'll be ready to rock and roll. All right. So, completely clean my charts. Didn't really trade as much this week, but we did want to make mention. We did hit a 1%, a 1 to 10, which is a 1% risk, 10% reward trade. We did accomplish a 10% reward trade. We only did one this week, and it was on Bitcoin, and that makes 7 consecutive weeks documented that we have at least accomplished one 10% trade. All right. So that's dope. That is very, very dope. Very, very amazing. So it lets you know how impactful these sessions are. Okay. So what I want to go over is because I completely cleaned my chart, I'm looking at gold. Okay. I'm looking at gold. And the thing about it is, I want everybody to understand. You have to combine. It's. I'm gonna say three. It's three different ways I combine trading. I don't, and I think about it is like my favorite anime is Dragon Ball Z. Anything dealing with Dragon Ball series is my favorite, from Dragon Ball all the way from the 80s all the way through Dragon Ball Super to what it is today. All right, the whole entire franchise. So the thing about it is, what I like to combine is I like to combine Wyckoff mixed with Elliott waves, mixed with harmonic patterns. Okay, and so I got the books. I got the books, so I can be able to show you all what I'm talking about. All right. So, Wyckoff, I got the author Ruben Villahermosa Chavez, who trades the Wyckoff method. He released 3 books. Okay, he released 3 books. Very informative books. I've read every single last one of them at least once. And you can tell by the dinginess of the book, by the minds of the pages. All right. So we're gonna do this. Let's see. Gotta make room. All right. Gotta make room. Let me go ahead and remove this. What's this? I got a book sitting back. Oh, that's developing the leader within you. All right. Which I am currently reading. We are currently doing personal self-development. We do personal self-development as well in the family, and we're currently reading Developing the Leaders Around You by John C. Maxwell. All right, Developing the Leaders Around You by John C. Maxwell. So, I want to be able to share this valuable information. I've gotten these books off Amazon. All right. So with Wyckoff, we can start off like this. All right. Before we get into the session. All right. So with Wyckoff, um, I ended up getting this book, not knowing that it was the second book that the author had written. So I read this book by mistake and then saw that he came out with this book. So this is part one, Trading and Investing for Beginners, by Ruben Villahermosa Chavez. Ruben Villahermosa Chavez. All right. RUBEN. Okay. Villahermosa. VILLAHERMOSA. Okay. Chavez. CHAVES. Okay. Trading and Investing for Beginners. Literally about 300 pages worth of very valuable information. Very valuable. And I just opened up to one page of the fundamental concepts talking about the time frames. Um, when it comes to the type of style of trading, what's the consideration? What's the categorization of a scalper, a day trader, a swing trader, or a position trader? These are the four different types of trading styles. Okay, and Ruben Villahermosa Chavez goes over it and says the time frame that you're looking at, the progression, the duration of the trade, the leverage, and the type of difficulty. It's in a table. And man, it's this stuff is very, very informative. This is the stuff that you can pass down. And I would love for more people starting now and going into 2025 to take this skill set seriously. It's up to you. But the thing about it is this. I don't generate a dime or penny for doing this. I just know my level of understanding and the level of commitment that I have with the skill set. And I know I can help so many people get there, is what I'm saying. So I'm going to continue to uh, bear fruit on my tree over here. Okay. And people are going to continue to pick off the stem. All right. So, Trading and Investing for Beginners is Ruben Villahermosa Chavez's first book. Definitely a must read. I recommend everybody that's going to be serious about the skill set of trading. I don't care whether it's stocks, crypto's booming. You got XRP. I'm looking at right here on my TV, XRP and Bitcoin booming. Bitcoin is at 100 grand, 100,230 right now, 100,240. XRP is sitting at $2.59, almost $2.60 for XRP. You have to get into these spaces, okay? So this book is 300 and some pages. Yeah. Um 300, definitely informative book. Uh 300 and I mean, this is talking about all the stuff like the bibliography page and things of that nature. So, the acknowledgement of the author and things of that nature. 325, 300, I would say 327 pages. Yeah, 327 pages. So definitely want to get this book, Trading and Investing for Beginners. Must read. You want to take skill set seriously, even if you want to take it semi seriously. All right. But then you have book number two. You have the Wyckoff Methodology in Depth by the same author, Ruben Villahermosa Chavez. How to Trade Financial Markets Logically. And on the back, Trading and Investing with Common Sense. All right. And so definitely piggyback off part one. Touched on it just like a movie. Then it goes into detail in part two. Talks about the Wyckoff market price cycles being the accumulation, reaccumulation, distribution, redistribution, and what's happening in every single phase from phase A, B, C, D, and E. And it's breaking down the actual events that's happening in those phases. All right. What's going on in the background, the BTS, the behind the scenes stuff within the market price cycle. Okay. Definitely want to get this book. Um, read this book several times. And This guy Ruben Villamosa Chavez is very, very informative. He's talking about S&P 500 index futures right here on this particular page. He's talking about S&P 500, the index, the futures. And if you didn't know, your 401k is a reflection, is based off the performance of the S&P 500. So if you didn't know that, now you know. Now you understand why your 401k be fluctuating like gas prices, because it is a reflection and it goes up and down with the performance of the S&P 500. And what do you do? How do you prevent that from happening? How you stop the bleed in order to prevent that the loss of the income that's in your S&P 500? I mean, the loss of income that's in your 401k and your IRA accounts. What you want to do is roll it over into an annuity. Roll over to the annuity. All right. And so I'm in life insurance as well. I'm studying that as well. Always learning every single day. I'm about growth. So I'm going to help people with that as well. So help people make money and save money. Who doesn't enjoy doing that anyway, as they're continuing to perform manual labor, and that window is going to close one day because you're getting older. That's the fact. All right. And then we have book number 3, Wyckoff 2.0, talking about structures, volume profile, and order flow. Still same author, Ruben Villamosa Chavez, combining the logic of Wyckoff methodology and the objectivity of the volume profile. Now, the volume profile is nothing but an indicator, and he's putting an indicator over the market price cycles, being the accumulation, reaccumulation, distribution, and redistribution, and giving you a more deep and depth insight. Is more advanced. This is his third and final book, and showing you like high volume nodes, low volume nodes, what is the area of interest is, the imbalances as far as where you could possibly take a buy or sell entry at. All right. I'm against trading indicators, but it's still a very informative book. All right. I like to naked chart trade, and I actually want to know what's going on in the markets, and as far as seeing all that clutter going through those candlesticks, actually understanding what price action means and what every single candlestick on every single time frame means. All right. That's me. But also have this Elliott Waves book, Elliott Waves Made Simple by Steve Sinclair. It's less than 100 pages. Simply get it off Amazon. This is it. I use Elliott Waves to let me know, to give me, it's like a GPS. Identify what wave I'm in and where that I could potentially go. Identify what wave I'm in and where I could potentially go. Okay. And so how long I can stay in that trade. Am I trading counter trend? Am I trading pro trend? So Elliott Waves would also help you with that, the GPS. Okay. And I also have another Elliott Waves book that goes into more detail. And this is by Robert Frost and Prechter. Robert Frost and is it Robert Frost? I believe his name is Robert Frost. No, it's Robert. I think, let's see, Robert Prechter. For sure it's Robert Prechter. I'm sitting here looking at his name. And where's Frost? Frost name. So it just says for sure it's Robert Prechter. Sitting here it says Robert R. Prechter. I could have bet my last dollar that this other guy's name is Robert Frost as well. It says Frost and Prechter. And we look at the back. AJ Frost. AJ Frost. So I see his name. All right. So it's AJ Frost and Robert Prechter. Excuse me. AJ Frost and Robert Prechter created this book. Here are their pictures. Here are their pictures on the back. Got this off Amazon as well as the Elliott Wave Principle. Same thing. Is the same thing as this book. Is just it goes into more detail. So this is just like a what I want to say, like not a rough draft, like a what I want to say, almost like a physical ebook, I guess. But an ebook, we know ebook is online, but this is a quick, simple, to the point, less than 100 pages. Steve Sinclair's book. This one goes into more detail. Obviously, you can see the pages, and you're talking about 220 pages worth of information. So yeah, it's talking about the Dow Jones and all that stuff, soybeans and S&P 500 and things of that nature. Okay, the different patterns. They got formulas in here, all this stuff. So yeah, very informative book. And like when you understand the waves, um, you can be able to, like I said, determine how long you can stay in a trade. So also, last but not least, this also came off of Amazon. Harmonic Patterns is the first book that I started learning how to trade harmonic patterns from a previous company that I joined that I'm not going to name. So Educate on there, I was following and was talking about harmonic patterns. Ran into a bit of financial situation as far as couldn't keep up with the monthly subscription, but I knew I wanted to learn the skill set. I had been sold on wanting to learn the skill set. So I got books over time, and this harmonic pattern book, how I make 90% winning trades with harmonic patterns, because the market does nothing but create M's and W's. You'll buy the M like this. Let me show you what I'm talking about with an M. So the market go from X to A to B to C to D, and you'll buy from the D level. And then the market will do what? X to A to B to C to D and sell from the W. Buy the M, sell the W. All right. And so right here in this book, it will show you different types of the 6 different types of harmonic patterns. And what you have to do is use the Fibonacci tool, the Fibonacci retracement tool, and you'll pull the Fibonacci retracement tool from X to A to find B. Okay. You go from X to A to find B, and then you'll go from B to C to let's see, you go from B to C like this. You go from B to C. Let's see, it's X to A. No, it's X to A to find B. It's A to B to find C. Okay. So you go from A to B to find out where C stopped at on the fib. And then in order to find D, you go from X to A to find D. All right. To identify what D is going to be. X to A to find what D, what fib level is going to stop out there. But here's the deal. I don't trade the harmonic pattern based off of fib levels. I'm not, hey, it's got to hit this fib level in order for me to get in. No. You can use the fib as far as to identify what harmonic pattern you're looking for, but you don't want to be sold on it waiting for a number. You're waiting on an accumulation. You're waiting on a bullish divergence and change of character. You're waiting on that pivot in the market. All right. So yeah, very informative book as well, going over 6 different harmonic patterns. I teach on all of this stuff. Okay. I teach on all of these things and these books that I just showed you. So very informative book. You can get off Amazon as well. All right. So let's get into the session. All right. So let's see how many people we have on here. We got 2 people on here. Shout out to you 2 people. I appreciate you all for taking time out of your busy schedule. Who's watching? Who's watching? Is it somebody that's in the Telegram? Somebody that's already part of the family? Or we have some newbies? We have some people that want to be a part of the family. What's up? Who's watching? I want to shout you out. Oh, what's up, Aki? Aki's already in. Harmonic Pattern book is by it says Virgil, Virgile, Art Do Trading. But the thing about it is, I think this dude's name is Sam. Let me see. Hold up. Oh, here we go. About the author. He got other books as well. It says Virgile, Virgil, Art ART do trading. That's one word. Art do trading. What's up, sister? Sister Shalom. Calling in from Triple D, Triple D. Yeah, so yeah. Art do, it's right here. Says by Virgil Art do trading. All right. Also, I have the Candlestick Trading Bible. I have a PDF of the Candlestick Trading Bible as well. So I'm going to post that in my Telegram chat as well. The PDF of the Candlestick Trading Bible. All right, very informative stuff. Very informative stuff. But you don't switch up your shot. You don't switch up. You don't switch up your form. Steph Curry. You don't switch up. You're gonna switch up your form. All right. So everybody ready? Everybody prepared? Who's the third person on the live? Who's the third person watching? I want to shout you out. Is it somebody that's in the family? Somebody that's brand new to the channel? What's up with it? Who's the third person? I've already mentioned Aki. I've already mentioned Sister Shalom. They're already part of the family. I guess they jumped off. All right. So here's the deal. We're going to go over gold first. And then I need you all that's actually watching. If you want a particular pair marked up, you can just spit it out to me in the comments. All right. Any given time. You're not interrupting me. I like a talk back church. My big sister Jay McGee, she'll say that. All right, so here's the deal. Gold on the monthly, we know gold is bullish. But that just because gold is overall bullish on the monthly does not prevent us and stop us from taking it for a sell on the lower time frame. You have 9 time frames to choose from. You got the monthly, weekly, daily, H4, H1, M30, M15, M5, and M1. Now here's the deal. The market is a trend inside of a trend, inside of a trend, with 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 inside of a trend. Okay. So that means the lower the time frame, the more often the trend changes. The lower the time frame, the more often the trend changes. Okay. Which also leads to what? More trading opportunities. Okay. So here's the deal. The market creates M's and W's. Okay. The market creates M's and W's, like it creates imbalances. The market is a reflection of human behavior. Okay. When there is an imbalance in the market knows it's created. The market knows that there's an imbalance that has been created and it doesn't like it. It wants to rebalance. Excuse me. It wants to rebalance itself because it doesn't like to be imbalanced. Okay. So there's so many imbalances right here on the monthly that have to be fulfilled. You got one right here, right? You got several, but obviously the lower the time frame, you will see more imbalances. All right, you'll see more imbalances on the lower time frame. All right, who's the third person that's watching on the live? I want to shout you out. I want to shout you out. I don't know if you're brand new. I don't know if you're already part of the free trading community, but I want to be able to shout you out. And like I said, if you didn't hear me before, on Saturdays, I want to start doing a onboarding, which means people that got started with us through the week, make sure that they have their broker up and running, whether they be trading, they're going to be trading on a demo account this upcoming week or trading on their live account. Have both accounts set up. Don't have to have money in it where you can have virtual money in your demo. That's not a problem, but as you're practicing on your demo, you can be taking $25 to $50 per pay period or whatever the case may be, and putting it into your live account until you get to the point where, hey, I have a goal of starting with 300. I have a goal of starting with 500 or 1,000, whatever the case may be, or I have a goal of starting with 100 or whatever the case may be. So my advice would be to start small, because in order for you to manage and handle big hair, you must be able to manage and handle small hair. In order for you to be able to handle an afro or dreads, maintain dreads, you got to maintain waves first. You got to maintain a fade first. If you can maintain that and manage that, then you can grow your way to manage a big hair. Same thing with a trading account. All right. So, third person that's watching, could you please type in the comment section and reveal yourself? Say, hey, I'm brand new. I seen your link on another platform, whatever the case may be. I already know two of them are watching, are Aki and Sister Shalom. They're already in the they're already part of the family. So reveal yourself. I just want to shout you out. Be like, hey, I appreciate you for taking time out of your busy schedule in order to attend to the live. All right. You're probably in an environment where you can't type, but I appreciate you being on, whomever you are. All right. So let's get to it. So here's the deal. I'm gonna break it down. I'm gonna break it down. I'm gonna break it down. So the market moves in a harmonic pattern fashion, creating M's and W's. But in order to create these highs and these lows, the pivots, the market moves in market price cycles as well. Because even though the market creates these M's and W's, right? Even though the market creates these M's and W's, it's still a part of the market price cycles being this being accumulation, this right here being a what? A reaccumulation, this right here being a distribution, okay? This right here being a redistribution, this right here being an accumulation, right? This right here being a reaccumulation, this right here being a distribution, this right here being a redistribution, and then coming down here, this being accumulation, and the market can buy up and do what? Break structure. Same thing right here. This being a what? We starting from the X. So the market prints accumulation, reaccumulation, distribution, redistribution, ARDR. Okay, but I'm just starting from the X because that's what begins the first leg of the harmonic pattern. So then you got a distribution, redistribution, accumulation, reaccumulation, distribution, redistribution, accumulation, reaccumulation, and then you got a what? Distribution. It sells to the downside, break structure. Right? Make sense? Makes sense, everyone? Let me know because I don't want to, lose people just sitting here talking, and I lose somebody. It's almost like you being in church and you don't understand the word, but you're like, yeah, Pastor, I understand the word. I understand it, keep going. It's the pastor's job to make sure you understand the word. He knows the teachings and he knows the word so well, but that's what he or she is instructed to do. Make sure that you understand the word. All right, everybody cool? Cool. Aki says it makes sense. What about you, sister? Sister Shalom, what about you? Make sense? Because we don't want to miss this next crypto wave. All right, wonderful, cool, bet. Third person, hopefully it makes sense. Right? I'm pretty sure you're in an environment where you can't type. I'm gonna make that assumption. All right. So here's the deal. Boom. Also, this is a default indicator. I did not put this up here. I did not modify it. I did not customize it. It's a default indicator called the Relative Strength Index. So it's called the RSI, Relative Strength Index, right here. And you can just type it in right here. See, RSI, Relative Strength Index. All right. The Relative Strength Index, it reveals to you when the market is oversold. When this purple line is down here at the bottom, is oversold. When the purple line is above the high right here, it is overbought. That is the reason to let you know, hey, it's overbought. We're alerting to be heading down soon. Hey, it's oversold. We're alerting to be heading up soon. Okay, that's all the RSI is. So the RSI also helps you identify divergences in the market. So at times, I'll show you. You can get to the point. You're gonna get to the point in your trading career where you're able to see a divergence and change a character with the naked eye. But if you can't notice it, you're not at that point of your trading career yet. The RSI, the Awesome Oscillator, the MACD, these indicators will help you identify where the divergence is at, because the candlesticks will be pointing in a certain direction and then the RSI is going to be doing the complete opposite. Okay. And that's where you have a divergence. That's where you have a distribution or an accumulation in the market. All right. So here's the deal. All right. Let's see. Remove this. All right. Let's prepare for the next upcoming week. All right. So here we go. Market created a high. Let's see. Obviously, this will be a accumulation right here. You can see how I tapped into this imbalance. This high right here will be a distribution. This will be a break of structure. Market accumulated, reaccumulated. Bam. So this is some type of imbalance on the monthly, but we don't have to worry about that because the market is way up here. Okay. So that's not anything we need to worry about like right this instant. All right. So the market did break structure right here. Right. So we're going to do it like this. Structure. That's a high. I suggest that if you're going to be, you should have a color code system. It is not my first time, won't be my last time saying this. You should have a color code system with marking up your charts. Every single time frame should have its own color. So me, in my aspect, when I see a color, I know what time frame it's on. If you keep one solid color for all 9 time frames, you're gonna lose yourself in your own analysis. So I recommend that you adopt some type of a system, color code system with your charts. So when I have black, monthly is on, the black is on monthly. I mean, my monthly chart carries a black color. Weekly is pink. Daily is red. H4 is blue. H1 is green. M30 is gray. M15 is purple. M5 is orange. And M1 is yellow. Okay. Any type of markings. I don't care whether it be I'm marking up a redistribution. I'm marking up I'm using the trend line, whatever the case may be. I'm marking it up. The color is going to be that color. Okay. Even if I'm marking up a structure point, it's going to be that color. All right. So right here, this is a distribution. This is a redistribution. Okay. You see the bearish triangle. So boom. I already got my template saved. I don't have to type it in. Boom. All right. This is an accumulation, divergence, change of character right here. This is a reaccumulation. So this would be the what? The low. All right. This is a reaccumulation. You can see how this is a what? Bullish triangle. Right? And then what do you see right in between here? You see a harmonic pattern right in between this reaccumulation. Okay, on the monthly. The harmonic pattern is right here. This will be the X leg. This will be the A leg. This will be the B leg. This will be the C leg. And then this will be the D leg. And then boom, there's the buy. All right. So like I said, the market does move in a harmonic pattern fashion. That's why I'm now going to combine Wyckoff with Elliott waves with harmonic patterns. I'm fusing it together to create this big magical being, just like Dragon Ball Z. When Goku, the strongest Saiyan, and then you got Vegeta being the second strongest Saiyan, you combine their powers together and you fuse them together. You got this elite fighter Saiyan. So that's what I'm doing with trading. All right. So here's another M. Look at this. Look at this M right here, right? Market did what? Broke up from here. Did this. Boom. Bam. Bought from right here. Right? Cool. And you can buy and sell as that harmonic pattern is cooking. Okay? There's nothing preventing you from doing that. All right? So the market then did what? Created this high. All right? Then it did what? Created this low. These two equal lows. All right. So we're just going to mark one of them. Then the market did what? Created this high right here. That's like, that'll be a lower high because it didn't break this high right here. So this will be a lower high. Then it broke structure right here and created a new low. So when the market breaks an old low and creates a new low, the bulls got to come in. That's where you see this distribution, redistribution, breaks this old low, creates a new low. Here are the buyers. Accumulation, reaccumulation, break structure, and ultimately leads to what? A new high, right? So we know this to be an accumulation level. So we know that on the monthly, we can go ahead and zone this area out because this is an area of interest where the buyers can come back in and create a future accumulation off of it. But we know this is long term. This is for position traders. Okay. It's for position traders. You can still zone it out though. You can still zone it out knowing that, hey, area of interest long term where the buyers can come in at. Right? Get in the habit of this being repetition. It's like a muscle. You're repping a muscle. You're not gonna just because you do it one day, you're not gonna expect that. Oh, I'm bulked up. I'm seeing some cut in my biceps because I did an arm workout for one day. No, it's got to be a continuous rep. Okay, that's how you start seeing results. Continuous reps, marking up your charts, right? So then you can see this reaccumulation through here, right? And so what comes out of a reaccumulation? You see this engulfing candlestick. Engulfing candlesticks represent what? Completion of a market price cycle. So right here, you see this bullish engulfing candlestick. That on the lower time frame is going to be representing what? Accumulation. You see the bullish triangle in between here, reaccumulation, right? So now the market has to head into what? Some type of form of distribution. Does that make sense? Does that make sense so far? Shout out to the fourth person that took time out of their busy schedule to join me. All right. Shout out to the fifth and sixth person that took time out of their busy schedule to join me. I want to be able to shout these individuals out. I already know two of them, but the rest of the four, I don't know you. I don't know who you are. I can't see you. Let me know. Type in the comment section who you are, whether you're part of my Telegram or you're free Telegram or you're not. I want to be able to shout you out because you took time out to be able to tap into this informative information. Hey, what's up, Janice? Janice, who's Jan Ice? What up, Janice? Janice took time out. Janice is also in the free Telegram group. That's what's up with it. Appreciate the love. All right. Appreciate the love. All right. So everybody's still nobody lost. Everybody's still cool. We on board, right? Absolutely, Janice. It has been a long time. Delayed gratification. Absolutely. Absolutely. All right. So we still good on the information. Nobody's lost. Cool. All right. So make that a zone. Zone that out. Now what I want to do is I want to go to the weekly. Let's see what's popping on the weekly, right? See what's happening on the weekly. Now, right here, we see how the market did what? Tap in right here. Why? Why did the market tap in right here and respect this area? Because the market broke structure in between here. This on a lower time frame, this right here, this area right here on a lower time frame is a distribution. Why? Because the market did what? Accumulated, reaccumulated, broke this structure, led to this high. That makes sense? It makes sense so far? Y'all see how small and how incremental the time frames are? On the weekly, do y'all understand that how the market moves with the market price cycles and things of that nature and refills these imbalances? Like the market literally, what are your areas to buy and sell from? You want an imbalance that led to a break of structure or change of character. You want your zones of interest, your areas of interest where the buyers and sellers can come in at. It has to be an unmitigated area that led to a break of structure or a change of character. This one led to a what? A break of structure. You can see the market accumulated, reaccumulated, broke this structure, led to this high. Came back on a lower time frame. This is a divergence, change of character right here. The market created a distribution, redistribution, came back in, tapped into the demand zone, and did what? Accumulated, reaccumulated, broke this structure, led to what? High. And bam, takes off. Make sense so far? Everybody good? I'll help you. I'll make sure you understand. We'll be on here for 5 hours if we have to. No, I'm just kidding. I'll make sure you understand though. I'm telling you, when you understand this information, you feel it's almost like it's almost like not cheating yourself. Like if somebody were to go through weight loss surgery, as opposed to actually changing their diet, customizing their diet, actually going cold turkey on the things that I don't need, and actually being disciplined with the journey. That's what it feels like when you learn this information. It's like, oh my goodness, I'm going to be the generational curse breaker for my family. Oh my goodness, I don't have to worry about where my next dollar will be generated from. You get what I'm saying? So, all right, cool. So now what I want to do is I'm going to zone this area out, right? Since we're on a weekly. Since on a weekly. Remember, every single time frame acts as its own market. So I'm going to put this on the weekly since we're on the weekly. And demand zone. Boom. This right here was a break of structure. Say bullish break of structure. So it's going to say weekly BOS above. So the market did this for the weekly. So hold on a monthly, we already got this as a low right here. So then on the weekly, we got this being a high. Turn this pink, right? That being a low, this being a high, this being a low. Breaking that structure right here. Bam. Weekly breaking structure above, right? Leading to, I can say leading to this high, then leading to this low right here, then break the structure once again. All right. And so then, boom. Now we get to see what's going on a bit more. Let's go to, let's see. Let's go to the daily. Now let's go to the daily. All right. So now we'll start the daily from here. So like I tell y'all, this stuff is key. Something that I go over. Oh, you talking about the indicator? Can I show the divergence on the indicator? Yes, absolutely, 100%. RSI. So yes, I'll show you. So right here, you can see it. Let's just, since we're already in this area right here. So look, right here, price is going to be slanting upward. I can see it with the naked eye. Right here, price is going to be slanting upward on the candlesticks. Since we're on a daily, I'm going to turn it red. Okay. And in the same exact area on the RSI is going to be slanting downward like this on the candlestick. Same thing with this one. After market what? Breaks an old high, creates a new one. It's going to create what? Divergence. And then it's going to be slanting lower on the RSI. Watch. You see it? You see it? I'm going to show you. You can see how it look right here. See how it's slanting lower on the RSI. In the same exact area, it's slanting upward. Look at this one. Slanting upward, slanting lower. Make sense so far? Makes sense so far? Like no cap. Every time the market breaks an old high and creates a new one, I'm already anticipating a bearish divergence. When the market breaks an old low and creates a new low, I'm already anticipating a bullish divergence. Makes sense, doesn't it? Now, when the market breaks an old high and creates a new one, that's just liquidity being taken. aka buy side liquidity being taken. Okay, when somebody say, "Hey man, I trade based off liquidity," which means here's the deal. There are three areas of interest where the buyers and the sellers can come into the market. Okay, speaking about the bulls first, the bulls can come in on an accumulation level. They have the opportunity to come in on accumulation level. Let me show you what I'm talking about. All right. The bulls have an opportunity to come in. This is an accumulation, reaccumulation that broke this structure and led to this new high, right? So here's the deal. The market has an opportunity to come in off of the accumulation level. That's number one. The market has an opportunity to come off of a reaccumulation level. That's number two. But in a downtrend, when the market breaks an old low and creates a new low, the bulls definitely have to come in. The bulls don't have to come in off the accumulation level. They don't have to come in off of a reaccumulation level. But when the market breaks an old low and creates a new low, which is a lower low, the bulls have to come in. You just don't know how they're going to appear. My anticipation is always they're going to create a divergence. Okay. Same thing in this example right here. You see this divergence, right? Bearish divergence, change of character. The market breaks an old high and creates a new high. The sellers don't have to come in off the redistribution right here. The sellers don't have to come in off of this distribution level right here. But if the market breaks an old high and creates a new one, the bears definitely have to come in. So if you run into somebody that says, "Hey, I trade based off of liquidity," this is simply what they're saying. Hey, I let the market break an old high and create a new one before I look for sales. Or I let the market break an old low and create a new low before I look for buys. That's exactly what they're saying. Does that make sense? Does that make sense? Because in baseball, and I use the baseball analogy like this, when it's time for the sellers to come into the market, it's okay. When the market breaks an old high and creates a new one, we're at a full count. 3 balls, 2 strikes. The batter has to swing. Or there's a high chance of risk that the batter might strike out, which means the bears have to come in. When the market breaks an old high and creates a new one, it's a full count, 3 balls, 2 strikes. The next pitch I throw, the bears gonna have to swing, is what I'm saying. When the market breaks an old low and creates a new low, it's a full count, 3 balls, 2 strikes. The bulls are going to have to swing. You just don't know how they're going to swing. You don't know how they're going to appear in the market until the candlesticks print, but you know they got to come in. Does that make sense? Everybody cool with that? Everybody go up? Everything kosher, everything copacetic. Like this is literally what people say. Hey man, I trade based off liquidity. All they saying is this, man. You know what? I don't look for sales until the market breaks an old high and creates a new one. Then I'm looking for sales. Man, the only time I look for buys is when the market breaks an old low and it creates a new low. Then I'm looking for my buy. That's all they're saying. So they don't trade based off of points of interest. They're not interested in the market hitting an accumulation level and looking for a buy. They're not interested in the market hitting a supply or demand zone. They're not interested in the market hitting a distribution level and looking for a sale. They're not interested in the market hitting a redistribution level and looking for a sale. But like I said, that's how I'm going to start trading. But we know for sure if the market breaks an old high and creates a new one, we looking for sellers. There's no doubt about it. It's not a matter of if at that point, it's a matter of when and how they're going to appear in the market. When the market breaks an old low and creates a new low, it's not a matter of if, it's a matter of when are the bulls going to show up and how are they going to show up. It's like this. Are they going to come in from the east end or the west end? Are they going to come in from the north end or the south end? Okay. What time are they going to arrive? What's the ETA? Okay, because we know they're pulling up. Okay, so when they pull up, are they gonna pull forward into the driveway? Or are they gonna back up? We know they're coming. We know they're going to appear. These are the things. These are the analogies that are coming up in the analogies that are brewing in my head. Are they coming in from the north end or the south end? Are they coming in from the east or the west? Okay. When they appear, are they going to just pull in the driveway or are they going to back in? Just a scenario. All right. Cool. Y'all following me. So here's the deal. Back to the chart. All right. So yeah. Market structure. Right. Boom. I told you when it comes to Elliott waves too, look at this. This right here is simply what? When it comes to Elliott waves. When it comes to Elliott waves, this is simply what? Wave 1, wave 2. And remember, wave 3, 4, and 5, the divergence is going to be what? After the market breaks the old high and create the new one. The divergence is you're going to anticipate the divergence after the market breaks the old high and create a new one. So right here would be what? Wave 1, wave 2, wave 3, wave 4, wave 5. It makes sense? It makes sense? You're going to have wave 1 and wave 2 internal, but you're going to have wave 3, 4, and 5 external. Wave 1 and 2 is going to be inside before the breaker structure. Wave 3, 4, and 5 is going to be outside after the breaker structure. So once you are writing this stuff down, jotting down these notes, you keep this mental note. Okay, cool. You chilling. You chilling. Divergence is always between waves 3, 4, and 5. All right, cool. Let's continue. All right, so let's see. Okay, breaker structure. We're looking at the daily. So we're going to start the daily from here. Look at this. So we see how the market did what? Tapped into a demand zone, right? So you can simply do this. Okay, market tapped into a demand zone. So look, you can start it from right here like this. Okay, this is a low right here. The market went up, created this high. Then it created this low. This low right here did not do its job, break structure and lead to a new high. So the sellers took over, right? Boom. Lower high. Bam. Lower low. Didn't do its job, break structure. Lower high. What'd it do? Lower low. Now here's the deal. You see right here, the market took out an old low, created a new low, right? So right here, you can see the divergence. How the price did what? Slant lower. And on the RSI is going to be slanting upward. Watch. You can't really tell in this particular area because we're on a higher time frame. Let me go to a lower time frame. Let me go to a lower time frame and let's identify it. I want you to be able to see this. You see how price in this area is slanting lower. After the market broke an old low, created a new low, slanted lower. What did it do on the RSI? Slant upward. Make sense? Got 7 people on the live. I'm telling y'all, man, this stuff is very informative. Man, y'all should be spamming your friends, your friends. Man, dog, y'all, you should be learning how to trade. Guy over here, man, teaching for free. Man, all you got to do is plug in. All you got to do is plug in. I got me. I got me. That's why I don't charge. I want to make sure you got you. But I can't make sure that you got you more than you got you. If that makes sense. That's a bar right there. That's a bar. Everybody good? Y'all see that divergence? Aki, I just be spitting it, man. It's like a freestyle. Be spitting it. So my 6 people on the live, y'all understand? Y'all good? Before I move on, everything kosher? We good? I'm attempting to make sure we good for the next week ahead. 7 people on the live. Right? Shout out to the 7 people on the live. I would love to name you all individually. I know we got Sister Shalom. I know we got Aki. I know we got Janice. That's the only 3 people that's typed in the chat and commented on the chat. And we've had 7 eyes on the live. That's the most eyes that's the most eyes we've had on this particular live. I want to shout people out. All right. Here's the deal. So bam, you see the divergence, you see the change of character, right? Okay, cool. Let's go back to the daily. All right, let's go back to the daily. All right. So cool. Let's see. So market created is low, right? You had the bulls overcome the last bearish impulsive move. So now you have what? Low, high, higher low, break a structure right here. The market created engulfing candlestick. So what you'll do is this. Because the market created engulfing candlestick, that'll be a what? An area of interest, right? Because the buyers can do what? Buy off this level. The buyers can definitely buy off this level. All right. So then the market continues. What does it do? Create a high, create a low, break that structure. Okay. Create this high, create this low. I know it looks a bit awkward, but then it did what? Create this high. And then guess what? This is an engulfing candlestick. So this is a what? Area of interest where the buyers can create a higher low and go back up and do what? Accumulate, reaccumulate, break the structure, create a new high. So what happened when the market retraced this area? This is just like a simple M. Rebalanced, it did what? Obliterated this area. So it let us know that what? There's a divergence right here. And why? The market did what? Broke the old high, create a new one. Make sense? Oh, what's up? Logo Mania. What's up with it? I don't know if you're a part of the our free trading community. I don't know if you want to be a part of our free trading community, but we do have free trading community. The description is in the link below this live video. You simply download Telegram and you can add yourself to the trading community and the trading signals chat channel. I have individuals on here who are testimonies that they receive very informative, valuable information for free. All right. So does everybody understand? I know it looked like a bunch of chicken pox or a bunch of measles on the chart, but everybody understand what's on the daily time frame? Everybody understand what's going on so far? Nobody lost in the sauce, right? All right, cool. All right. So now let's go to a lower time frame. What we particularly dealing with as far as in this area right here. Okay. So like I said, this is an area of interest because on the daily time frame, that is an engulfing candlestick. Okay, and the market is supposed to do what? Respect the imbalance of that engulfing candlestick and do what? Continue to create. It's supposed to create a higher low off of this engulfing candlestick, and boom, go up. All right. So now what do we have? The market, boom, went all the way back down here, shot up, and did what? Created some type of lower high right here, and then did what? Took out this low, created a new low, right? So the fact that the market took out this low right here, create a lower high, took out this low, who got to come into the market? Old low broke, n- old low has been broken, new low has been formed. The bulls have to come into the market. So here's your accumulation, reaccumulation to go back to some type of supply zone to create a what? Lower high. And here's your distribution, redistribution that does what? Break this low, create a new low. Now who got to come back into the market? The buyers got to come back into the market. Does this all make sense? Does this all make sense? All you got to do is follow. All you got to do is follow. It's not hard. It's not hard. All you got to do is be patient, be disciplined, and follow. Okay? But what you must do when you're trading is respect the imbalances and the unmitigations of these candlesticks. Okay? Because we about to go right into it, right? So here's the deal. Now that we see this is a distribution, redistribution that broke this low and created a new low, the buyers got to come back into the market, right? Buyers got to come back in. So here's the deal. Buyers come back in, right? So let's say we're going to do it like this. We can say it just like this. Market went from this high to this low to this lower high, took this out, created a new low, went back to this high, bam, took this low out, led to this low, then led to what? This high, this low, break structure, leads to this high, right? Now here's the deal. The market is supposed to do what? Respect the engulfing candlestick, right? You see how it's unmitigated right here, right? And then the market came back and did what? Refilled the gap. It was a gap right here, and the market refilled it, right? Market refilled this gap right here, right? Boom, creates a lower high. When the market respects the engulfing candlestick, it's supposed to do what? Distribute, redistribute, take out this low and create a what? New low. But guess what? Between this low and this high, the bulls have an opportunity to prevent this low from being broken. Okay? They always do. So the market smacks what? A redistribution, this engulfing candlestick, like it's supposed to. It sells off, and you can literally see the what? Distribution, redistribution, taps into a what? Demand zone, engulfing candlestick, accumulation, reaccumulation, right? Look at tell you, engulfing candlesticks represent what? Completion of a market price cycle. Accumulation, reaccumulation, break structure leads to what? Ultimately, what? Break of this high. So guess what? If you break an old high and lead to a new one, what got to come in now? The sellers. I got 9 people on the live, y'all. This is amazing. That means so many people getting a lot of valuable information for free. For free. I have an individual in my chat, bro in Florida. He always say, "Bro, I don't know why you not charging. This is valuable information. I don't know why you're not charging." Hops on me. He's been hopping on with me. We've been knowing each other since 2019 for 5 years, And now, but recently he's been hopping on with me to trade with me for the past 7 weeks. So we're going on 2 months. Next week will be the 8th week. We're going on, this will be the second month in a row, 8 straight weeks. And I put out a weekly schedule. Every single week. Everybody knows when I'm going live. All right. Make the assumption I'm going live. If I did not put in the Telegram chat channel that, hey, we're postponing, we're rescheduling, we're canceling the session, I am coming live. I am going to attend live, even if I'm tardy. All right. Let that be known. All right. So here's the deal. Let's mark these markings up. So here's the deal. The market's supposed to smack an engulfing candlestick and do what? Take this low out, create a new low. The buyer stop it. So now you can literally see right in between here. You can literally see right in between here the redistribution, right? You see the redistribution right in between here, the bearish triangle, okay, which is not market structure, okay? Distribution high, accumulation low is market structure, okay, boom. So now you got a what? A low, a high, higher low, break a structure right here. Okay, what leads to that? Accumulation, reaccumulation, breaks the old high, leads to a new one, boom. But you don't even have to look at that one. Yeah, the sellers came in. You could have sold this to this area and made money, right? But we're going to ultimately go to this one. This low led to the break of this structure, right? Okay, low, reaccumulation. So then you could say, hey, you know what? Oh, I see the imbalance. I see the reaccumulation. This is an area of interest where the buyers can come in the future. Absolutely 100% correct. Absolutely 100% correct. Area of interest, you see that reaccumulation unmitigated. This right here, all of this right here could be what? Trendline liquidity. Trendline liquidity had it. Everybody, hey, buy right here, buy right here, buy right here. And it could have yanked people and hit their stop loss, because what people are going to do, the uninformed and ill-informed traders are going to have their stop loss right below this trend line. You're going to have it right below that trend line. All right. So let's continue. Okay. So we're going to zone this out and say, hey, daily demand zone. Right. My people on IG, I'm on YouTube Live right now. The YouTube link is in my bio. YouTube link is in my bio. I will be dropping tonight the schedule for next week. All right. So now this low leads to this high right here, which ultimately does what? You can see the distribution. You can see the redistribution. Boom. This high leads to this low. Leads to what? Tapping into a supply zone. This supply zone did not do what? This lower high did not do what? Break this low and lead to a new low. The buyer stopped it. And then bam, accumulation, reaccumulation, break structure. Boom. Now this turns out to be what? An entire reaccumulation. Because you can see the market doing this. Slanting like this. And then doing what? Slanting upward like this. And then if you understand that these triangles, you know, okay, this could be a wave 4 or a wave B when it comes to Elliott waves. Okay, they can help you as well with the identification process. All right, so now we're just going to go look. I was just showing you some stuff right in here. So now we're just going to go to this right here, right? So you're probably asking me, hey, so bro, so what would you look at and what would you see right here? What do you see? Okay. what I see is an engulfing candlestick right here. Okay. This one is unmitigated. I completely see that, right? I see this being an engulfing candlestick right here, right? And the market could do what? Come back, hit this zone, right? And sell off. 100% valid. So I can put this as a daily supply zone. I can clearly see that it's still what? Unmitigated. Okay. So see. See what's up. Let's go to the H4. Let me see. Okay, let's go to H4. Mm-hmm. Mm-hmm. Mm-mm. 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 Mm-hmm. Let me see. Let's see. Weekly, daily. Everybody following so far? We got 13 people. I've been trading for, this is my 5th year. I'm just now seeing your comment, Mixed Media Clothing. I've been trading for 5th year. I can hear one of my 5 dogs at my office door sniffing hard. I believe it's Pepper. I can hear her sniffing hard, attempting, just alerting me. I want to come in the office. Sniffing under the door real hard. 13 people on the live. I appreciate each and every one of you. I want to shout each and every one of you out. You can please comment in the section and say your name and where you calling in from. I really appreciate it. You taking time out of your busy schedule. You're a very busy person. You didn't have to come on, but you did. You're looking at it. I've been trading I'm in my 5th year. It's people that's already been trading with me for the lengthy period of time, for years, and they continue to show up. It's free value information, and they continue to show up. And some of these people are already on the live, and they comment in the live. They have their own testimony and their own experiences trading with me and helping them learn this information, helping them go from this level of trading as far as knowledge based and no awareness, or maybe semi awareness, to the awareness is up here, and the awareness is continuing to elevate. I'm more focused on elevating your knowledge of trading. If I focus on elevating your knowledge of trading, it'll automatically help you be disciplined. It'll automatically help you be less wanting to pull the trigger, being trigger happy. Here's the deal. You never miss a trade. I learned the information over time. There wasn't a specific video, a specific person, or a specific book that, like, oh, so what I call light bulb moments. You know how in cartoons, back in the gap, I'm 33, by the way. Back in the 90s, early 2000s, they had cartoons, let's say for instance Tom and Jerry. When they get an idea and they the light bulb pops on top of the head, I had so many light bulb moments. I'd be like, oh, this makes sense. Shout out to you, bro, LT. I appreciate you, bro. So yeah, LT, we attended college together. We attended college together in Louisiana. Uh, Pretty great brother. Really have a true utmost respect for him. The things I be posting on Snapchat and so he said, bro, he always say, bro, the way Orlando is dedicated to hooping, that's what this trading is like. The level of commitment that I've seen him coming to the rack every single week. By the way, Um, by the way, I was coming to it's the RAC, WRAC, Wellness, Recreation, and Activity Center that we had on our on campus in college. And you're a student, so you swipe your card, they keep track of how many times you've been in there in a week. And so if you're the person that's been in the rack the most in the week, and they're seeing it in their system, what they'll do is display this. I went downstairs one day. They don't even let you know that you're the person of the week or something like that. You have to go downstairs to see it. So I went downstairs to go get a lift in, and I'm lifting or whatever the case may be, and I just look on the wall, and they already have it printed out. They have your name and everything and stuff like that. It's like a surprise. And I'm looking. I said, "Oh man, I'd have been down here, and it wasn't a personal goal. I didn't set out to do it. I was just, let me get my workout in. It's time for me to get my workout in, And I'm the person that's been in there the most, the student of the week or whatever, however they call it. It'll be two people, and so I actually got a purple shirt that says, I forgot what the slogan said, something without the rack. Something without the rack makes 1 week. Oh, 7 days. 7 days without the rack makes 1 week. It hits both. It hits both ways. It's a combo. 7 days without the rack makes 1 week. Weak strength wise, like makes you weak, like you're a weakling. 7 days without the rack makes 1 week. That's what the slogan says on the shirt. I was like, bro, that hit hard. That's a bar right there. I just want people to be able to, y'all can't sleep on this stuff, especially XRP, Bitcoin, people looking at fuel cell, people looking at all this trading. It doesn't matter if it's a stock market, forex market, crypto, metal, indices, futures. All these candlesticks move the same. They move the same. You can pick a random pair. You can just stick to that pair. You got to look at this. You got to look at these pairs as like dating. Like, okay, I can't sit up here and go on 7 dates, which is mean dating seven pairs. I could pick 1 to 2 who's in the hiring process, and then I just stick with those, and you can stick with those for the rest of your life. You don't even have to worry about anything else. Now, my recommendation is you got pairs. Ain't no thinking is the way to go. It's the way. I'm gonna tell you this, and I've said this once before. It's not the first time I've said this, but it won't be the last. People are either gonna be forced, either people are gonna choose to learn how to trade, or society is gonna force them to learn how to trade. Because here's the reality. Here's the reality. I'm not talking about trading because I want you to trade. I'm talking about trading because you're going to have an obstruction, or there are so many things that can obstruct you from can obstruct your earned income. Your 9-to-5 income, me being an EMT and a firefighter, is so many things that can be that can get in the way of me clocking in, is what I'm saying. So many things that's out of your control that can prevent you from clocking in. When that happens, what are you going to do to make up for the gap and loss of income? That's my question. What are you going to do? You have no things going on in the background that are going to help you suffice and make up and close that gap for that loss of income from January 1st to December 31st. It is, if you believe, let me say this. Let me say this. Don't you know, from January 1st to December 31st, a person that works Monday through Friday, weekends off, right? Let's say person, Casper, whoever the case may be, they call no days off from January 1st to December 31st. They work Monday through Friday, weekends off. Don't you know that you actually you only work in 9 months and that you actually spend 3 months not making an income? You spend a whole quarter not making an income. Think about that. You spend a whole 3 months not making an income because there are at least 50 Saturdays and 50 Sundays in each year, which is what? 50 plus 50 is 100. How many days are in a quarter? 90. 90 days are in a quarter in 3 months. So, but there are at least 50 days, 50 Saturdays, and 50 Sundays in each year. And this is the 48 hours that a person's not making an income. You're actually spending 3 months not making an income. So how do you think how do you think that math is not mathing? How do you think you're gonna get ahead? You spend 9 out of 12 months working. In 3 months, you're not making an income. That doesn't make sense. It doesn't matter how big of an income that you're making in those 9 months. You still have 3 months where you're not making an income. So how are you going to close that gap is what I'm saying. See, with trading, you don't have to be in a specified location. You don't have to be in a specified building. You have all of the access to all of these Wi-Fi enabled devices. Why are you choosing to go day by day, each day, not make an income from it? Let's just say what just recently happened about maybe a few months ago, right? Hurricane Beryl. I'm out here in the H. I live out here in Houston. Hurricane Beryl. I was okay. I was good. Lost electricity just like everybody else. But what did I do? Got my tablet, turned on my mobile hotspot on my phone, and I sat there and I traded in my driveway. Made money too. Went to work just like everybody else. Boom, shift got cut short. Lost income. So what I'm gonna do? Oh man, bro, I'm gonna lost 3 days worth of income, man. I don't know what I'm gonna do. These bills got to get paid, right? So bills have found a way to still come in by any means necessary. Why haven't you found a way for your income to come in by any means necessary? Is what I'm saying. Like you sitting there still taking it on the chin and saying, I'm okay with not making money today. And it's not about making money. It's the fact that the bills still show up and you still taking it on the chin. You're wondering why you got too much month at the end of the money. You wondering why the math is not mathing. God gives us an opportunity every single day, and you got many people who take it for granted. If you plan on having a family or you have little cousins, you're an auntie, you're an uncle, you got nieces and nephews that look up to you, you got somebody that looks up to you, idolizes you, our job is to leave a legacy. You can't pass down a 9 to 5. There's nothing wrong with having one, but you need to come to the realization, I don't own this and I can't pass this down. But what I could do is I could take this skill set and I could pass this skill set down. This requires no degree and just a decision. No degree and a decision for you to take this information seriously. That's it. That is it. I believe college is pointless for if go to college if it is a requirement for your profession that you're going into. That's what college is for. But if college is not something that's required for your profession, I believe it's pointless. It's pointless. You have more success. Why do you think you have more successful people without a degree than successful people than people with a degree? You have more successful people without a degree and a college education versus people that have a degree. And why go to college to practice something for 4+ years and then I come out and get a job that's less that's less than the debt that I've accumulated in my 4+ years of college. So say for instance, I accumulated um I accumulated 6 figures in student loans. Okay. And I come out and get a $80,000 job or a $70,000 job. You still $20,000 to $30,000 short. You $20,000 to $30,000 in the hole. Makes no sense. But the most highest income paying skill set requires no degree, no college, just a decision. But everything else that's less than that requires a degree. Society wants you to completely ignore the enemy. Let me say this. Society and the enemy wants you to completely ignore the talents that God has given you. That's what they want you to do. They want you to concede and say, hey, you want to know what? I don't deserve to have I don't deserve to be financially free. I don't deserve to have a steady income flow. The thing about it is you do not want to go into a mental health depression state of mind when it comes to finances. You don't want those problems. You don't want that smoke. But people every single day, or guess what? Every time Monday comes around, everybody, oh, man, the weekend went by so fast. Oh, it's Monday. Oh, I really don't feel like clocking in today. Well, hell, why don't you become an entrepreneur? Why don't you become an entrepreneur? Why don't you work on becoming an entrepreneur? Oh man, it's too stressful. Oh, oh man, I don't think I could do that. Oh, but guess what? You complaining when it comes Monday. Why are you complaining when God gave you an extra day? God gave you another opportunity. It's somebody in this world right now who's grieving over a loved one passed away. But you taking for granted that it's Monday because you got to clock in your 9 to 5. That's a choice. That's a choice. Nobody put a gun in your head. That's a choice. So my thing is, I don't have to do these lives. I don't have to do this YouTube live. I don't have to do these weekly trade watch lists. I don't have to do the Telegram group, the the free trading community and the free trading signals. I don't have to do that. But I understand the importance of it. It's not about me. It's not about me. It's about everybody else. It's about other people. And all that it needs to be is one person impacted. Not many, one. You touch one soul. Here's the deal. Here's the true honesty. Many people are going to forget what you say, but they'll never ever forget how they made you feel. You'll never ever forget how somebody made you feel. You'll never forget it. You'll forget what somebody said, but you'll never forget how they made you feel in a certain moment in your life and your time. It's like when you in those down moments mentally, physically, emotionally, spiritually, or financially, you're like, man, who was there for me? Who called and checked up on me? Who sent a text? Who sent a DM? And the thing about it is, I get everybody in my free trading community, they have my personal cell phone number. People don't care how much you know until they know how much you care. People don't care how much you know until they know how much you care. It can't be transactional. It's got to be genuine. So I gave out my personal cell phone number in the trading community. Some people saved it. Some people didn't. That's okay. But I want to let you know how much I care about your future. I care about your present. I care about where you're going. Not only associating with the skill set, but just in life in general. And everybody always say, "Oh, I wish I was around like-minded individuals. Oh, I wish I was around a group of people who want to go for their goals, who some go-getters, who are very ambitious and driven." So that's why I chose to become a licensed life insurance agent. I trade. I'm an EMT and I'm a firefighter. That's my day job. Okay. But I understand that my my 50s, my 60s, and my 70s are gonna be well off and appreciated for what I did in my 20s and my 30s and my 40s because of the books I've read, because of the knowledge that I've applied. You want to be implementing and putting in an application that's gonna pay off for you in the long run. Like I see my parents and I see my grandparents and I see other people as far as people that's older than me, 60s, 70s, things of that nature, struggling to live off of Social Security income. You don't have, I'm not talking about the materialistic stuff, having a big fancy house and stuff like that. All I'm talking about is because here's what you're going to put yourself in a state of mind of. Things from January 1st to December 31st, they're going to be things that come up in life that are important, right? Why does our income have to be the sacrificial lamb that we have to take care of this important thing and then our income goes to zero? Because we're focused not making an income. I'm not making the focus income, but why does the sacrificial lamb have to be our income? Because we got to take care of this more important thing. That's why you need something in the background to be able to generate, invest, trading, okay? Investing into life insurance and annuities. These things are vehicles that run on their own once you set them up. And it's going to give you a financial peace of mind. I'm telling you, you're going to look at money differently. You see on the back of this wall back here, I have so many books. And that's not all the books that I have in my library here in my office. It's so many books over here. Like I got books on annuities, right? Annuity book, investing into annuities, how to earn high rates of return safely. Like I got index universal life insurance book, how to win the financial game of life, invest like the wealthy and generate tax-free income. Come on, who wouldn't want tax-free income? Um, right here, money, wealth, life insurance, how the wealthy use life insurance as a tax-free personal bank to supercharge their savings. Number one bestseller. This book is less than 100 pages. Like, come on, man. I invest into books. I pay for that admission. The price of admission is going to be cheaper than the value you get out of it. So it's an investment. Two things, and I'm gonna leave y'all with this. I'm gonna close on this. Two things people will never say you'll go wrong investing in. Two things is I don't know what your religion is, but that's besides the point. Investing into God's kingdom, because scripture says Malachi 3 that if you continue to invest into my kingdom, it will open up the gates of heaven and outpour many blessings that you're not going to have room enough to receive. That's his word. So you can't go wrong investing into his kingdom, tithing, okay, and investing into yourself. Nobody would ever say, or nobody could ever say These are the two things that you cannot go wrong investing into: God's kingdom and yourself. All right. I appreciate each and every one of you for taking time out of your busy schedule in order to listen to what I have to say. It is always greatly appreciated, and I will never ever take it for granted. Have a safe, blessed, and productive rest of your super Saturday. Know that I love you. And as I always like to say, God created us on purpose to fulfill a purpose. So, what purpose are you willing to fulfill? And always remember, don't be one of many, be the one. If you are not in my free trading community, what you can do is download Telegram, come back to this live video, subscribe to the channel, okay? Because I do these weekly trade watch lists every single Saturday. Hit the notification bell, and in the description below, you'll see the regulated broker that I use. You'll see the prop firm that's also in the description below, and you also see two Telegram links. You'll see the trading community and the trading signals chat, where they are free to your disposal. All you got to do is download Telegram and add yourself. And then once I see the notification that you added yourself to the trading community, I don't introduce you to everybody. I introduce everybody to you. So I'll tag you in the Telegram and shout you out and say, hey, this person right here is embarking on their journey to become a consistent, profitable trader. Let's give them a nice, warm welcome. And it's about growth. I'm creating a community and a company called Growth. It stands for getting rid of what tranquilizes happiness. I'm all about growth. Getting rid of what tranquilizes happiness. That's a bar. Boom. I'll see you all. Like I said, I'm about to put out the schedule in the Telegram. I'll see you all Monday, 4:30 a.m. Central Standard Time, 5:30 a.m. Eastern Standard Time, 2:30 a.m. Pacific Standard Time. Let's run it up. Let's continue to impact the world. And so mixing media, add yourself, mixing media and clothing. Mixing media and clothing. What I want you to do is download Telegram and add yourself to the chat. I take newbies, I take beginners, intermediate, or advanced traders. That community is at 92 members right now. 92 members. So, hey, join. You want to learn? I'll help you learn. And then you're going to have access to live recorded Zoom calls. Come on and ask questions, vibe with us, take trades with us, take lessons together. You know what I'm saying? Boom. Come learn. Come learn. Everybody that's watching this live or that's commenting on this live, they have their own testimony experience from me. Let them tell you. Let them tell you. And here's the deal. You are more than welcome to introduce this chat to other people that you may know may be interested in wanting to learn the skill set. All right. You all take care. If you all need to reach out to me, you all know how to reach out to me. And I answer all DMs and notifications and anything and stuff like that. All right. Y'all take care. And we're going to run it up next week. Salute.